Hey guys, tax season is here. I want to give you some tips, walk through the importance of taxes, and then how we can get you guys prepared. So let's start with the importance of taxes. Why do we file taxes and why filing your taxes is important? So why do we file taxes? The goal is to let the IRS, Internal Revenue Services, know how much money you made during the previous year, and you can file to claim tax credits as well. Earn income tax credits or child tax credits. These are things that kind of give you a break because we know what society we're living in. And that is a part of our checks and balance type system where we pay taxes and then we kind of get some returns back for when we pay too much, or essentially that's how it goes. You file your tax because you want to avoid interest and penalties. So everybody does have to pay taxes. If you make over a certain amount of money, for a certain amount of age, you have to pay taxes regardless. And so we pay them to avoid the interest and the penalties and fees if we don't pay them. Even if you can't pay, you can request an extension to avoid owing money, but it's like you kind of have to pay. You also want to protect your credit. In our program, we are working so hard to make sure that you guys are saving and building your financial stability, and credit is a part of that. So definitely paying your taxes will kind of show, it's like a year check to show all the things that you've done that maybe creditors didn't see from Credit Karma and things like that. Filing on time also avoids a lien, and so that will affect your credit as well. So we want to avoid that by making sure we file and file on time. Building your Social Security benefit. Filing your taxes, when you retire, you will earn a higher monthly benefit if you do your taxes. So that always goes hand in hand. And then, of course, it gives you an accurate picture of your income. Lenders will look at a tax return to figure out your interest rate. So if we're thinking of buying a home, buying a car, buying anything that it will take like a lender or a loan, your tax returns are important because it kind of gives you a full income history, an income outline, seeing how much you pay, and give you a really big breakdown. So now that we talked about the importance of taxes, let's talk about some golden rules. Of course, file and pay your taxes on time. Penalties and interest for both are steep, so we want to avoid all penalties and interest. Really, we do. Keep your records. Your records can be anything. We'll go over that in a little. And then when in doubt, ask for help. Of course, I'm here. Kente's here. Miss Anita, Mr. Lloyd, Miss Cynthia. If you're in the Community Restoration Project housing, they're here. People at Welcome House, Miss Tanika, she's there. Definitely reach out. Miss Roxy, I believe, as well. And reach out to these people because we're all here to help and assist you. And as you guys know, we are having Wednesday workshops starting today, February 8th, until April 12th. For tax appointments. They're 1 hour long appointments. You can come and you can either do your taxes and you get a $25 gift card if you're doing it through My Free Taxes, or you can come and ask questions. So definitely I'll leave the links for that in the description box, but that's coming up. So let's move on and we'll talk about the tax formula. Skipped over it. So the tax formula, essentially, this is what kind of makes your taxes. So we have income, less exclusions from income. We have equals gross income, less deductions from income, equals adjusted gross income, standard, less standard or itemized education, and equal stable or equal taxable income. It was kind of hard for me to read that last one. I'll give you a second to kind of read over the descriptions for some. And also feel free to pause the video. Okay. And then we're going to move on to the next slide. So of course you have your taxable income, times tax rate, equals income tax, less tax credits, and then equals tax payable, what you owe. So like these are kind of like the breakdown on the left, or these are the things on the left and then what it does on the right. So you can kind of go and it kind of defines what each one is. So income is your wages, salaries, tips, and interest and dividends. Less exclusions from income. You have employer provided benefits and gifts, life insurance proceeds. That equals your gross income. Then you have less deductions from income, IRA contributions, self-employment tax, business expenses, and more. And that equals your adjusted gross income. Then you have your standard or itemized deductions, or your less standard or itemized deductions. And that's mortgage and investments, intra-state tax charitable contributions, and that is your taxable income. And then we have our tax table, which is coming up, and then we have earned income tax credit, child and dependent care credit, and that is what you owe. So all of this kind of goes together. It's really confusing in this format, but essentially all those things kind of break down what you owe, why you owe it, how much you have to pay back. There are certain rules for each one, which we're going to get more into. So of course you have your tax rate, and in the previous slide we're talking about the times tax rate. This is it. So essentially, if you make $0 to $10,000, you would do, or 10% of that will be the tax that you owe. So it's like 10% of that is taxable income, and that is what you will end up paying to them either through your checks. Like if you get the taxes taken out, then you pay it through your checks, or if you if you have your own business, then you'll pay a percentage of that, and essentially as your income increases, that percentage increases. And then as you can see, like for example, we'll do 35%. So those that pay 35% make between 215 or essentially 216 and 540,000. So what they would do is pay 49,000, or essentially almost $50,000 plus 30% of the amount over 215.95. 215. So let's say they just made $215,951. They're going to pay $49,335.50. That's it. But if they made $270,000, then they're going to pay that almost $49,335.50 plus 35% of the amount between 216 essentially and 270. So I believe that's like, I don't know, 50 something, 54 maybe. Yeah, I think it's like 54,000. So they do 35% times 54,000. Get that number, add it on to that 49,000, and that is the money that they would pay. You guys don't have to worry about that too much, but just so you know the breakdown. So now we're going to talk about completing taxes on your own, because as we approach this tax season, if you're filing through myfreetaxes.com, you will be completing the taxes on your own. However, you will have assistance available to you. So let's start with the deadlines. Deadlines may be different for the federal, but the deadline for Georgia is April 18th. However, everybody will have their taxes completed way before then. And we can also try to file federal and state at the same time. I know it's TurboTax. You can do it at the same time, and it's super easy. And so ensure you need to file. That's the next step. If your income is below a certain threshold, you do not need to file a tax return. Single filer under 65 making less than $12,950 or $12,950 does not need to file. That is none of you guys, so all of you guys should be filing. Review your documents from last year. So if you guys filed your taxes last year, then you're pretty familiar with how this process goes. Just make sure you have that tax return available from last year, so you have something to refer to make sure you have accurate information. Of course, you gather all your documents needed. So that's your W-2s, your 1099-2s, your 1099-Cs, 1098s, W-4s, W-9s, all of those that show and go towards your employment, gather those, as well as if you are self-employed, gather all receipts, gather all relevant information towards your income, anything that you spent money on or anything that you that made up your income. Make sure to include it. Choose your standard or itemized deductions. So when you file your tax return, you can choose to claim the standard deduction or the itemized deductions. It kind of depends on what you think is the easiest. I typically go with the standard deduction. Itemized can be a little bit confusing because you have to make sure that everything is accounted, so they don't come back and say like, oh, hey, this is not right. We don't want them to come back to us. We want to file and be done. And then, of course, you add a state tax filing if needed. Of course, we in Georgia, we file federal and state taxes, so that kind of will be handled at the same time. Next up, we have check all your forms and data. So take time to double check everything, print the forms out, and review the information. Pay special attention to numbers, including income, expenses, as well as social Social Security number and your ID numbers. Just do your best to make sure everything is accurate. Like, you know, I when I build furniture, my dad used to say, measure twice, cut once. So this is your measure twice, double check everything, and cut once is going to be the sending it to the tax. We only want to do it one time. So it's in our best interest to, of course, make sure all those ducks are covered and know that you have an organization supporting you for like essentially 2 months in preparation for this. So the deadline is April 18th. We do have a little bit of time, but I do want you guys to, of course, be more active. So the sooner you do file, the sooner you do get your tax return. But if you do need more time, request an extension if necessary. The taxes are due by April 18th. If you need more time to file your federal tax, apply for an extension. The IRS gives you until October 15th of that year to file. However, you are still required to estimate the taxes you will owe and pay those by April 18th. So it's not just like a get out of jail free card. You get to pay in October, but you do pay an amount, and then let's say you pay, I don't know, $2,000 in taxes. Yeah, that was the money that you sent off. You didn't know if that was accurate. You didn't, you didn't know for real, but you just sent that off. In October, when you go to file file completely, they're going to see that $2,000, and if your amount is under that, then they're going to give you back that money. If your amount is over that, then you'll owe it by October. But this will give you some more time to build up that income if necessary. So like if you're expecting to pay it back a lot, then it gives you time to build it up till then. However, you do need to pay an amount by April 18th. Of course, filing electronically, we will be doing that with TurboTax. So filing electronically is convenient. It helps keep your private information more secure than sending your returns through the mail. Electronic filing with direct deposit is the quickest way to get your potential tax refund. That's right, you can connect your bank account to your tax return and get it straight shipped there. I know you guys know that though. Of course, check to ensure the returns received. Usually there's email sent out if you're filing online. If you choose to file by mail, then you should wait for something back in the mail to say that it was received. But of course, we're doing it online if you're doing it with us, so you don't have too much to worry about. Let's see, tax resources. So we will be working with myfreetaxes.com. As you guys know, you'll get a $25 gift card for simply filing your taxes with myfreetaxes.com. So I want everybody to do it if they can. But we do have VITA sites. These are volunteer income tax assistance sites. They're posted kind of in Metro Atlanta, West End Mall, Greenbrier Mall, Clayton State University on Saturdays. But you can go here and get free help with your taxes and have somebody work with you. Also, we have Free File Alliance, which is the Georgia Department of Revenue works with tax softwares to offer free tax prep and resources. So definitely, while we're in this tax season, take your time to go through all of these options and see which one works best for you, because at the end of the day, I want you guys to do what's easiest and best for your lifestyle. Let's talk about the documents needed. We went over this a little bit, but just to give you a quick run through: W-2s, 1099s, 1099Ks, 1099 NEC, 1099 MISC, 1099 INT, and of course records documenting all digital asset transitions, charitable contribution receipts, medical bills if electing itemized deductions, and bills for energy credits. Fastest way to receive your refund is, of course, filing online and getting it with your direct deposit. If you need any help obtaining these documents, let me know. Usually they are sent to you from your employers, but if you're having some trouble, just reach out to me and I'd be happy to advocate for you. And just to let you know, for our program, you will not need your 1099, so you don't have to worry about that at all. Now, what to do with your tax refund? Create an emergency fund. We're kind of doing that already with savings. So, of course, there's a bunch of savings in here, but I want to focus more on the second, third, and fifth bullet. So that's make a payment on your debt. As you guys know, this tax return is an amazing opportunity to boost your credit. So what I would do is, since we're working on saving already in our program, we've already got an established, consistent habit that we know we're going to put, between $100 and $150 in our savings each month. So let's make this tax return count for a bigger thing. So I know some of us want to go and work on our credit. This is going to be a great way to pay off any major loans, any debts, anything like that. Also, if we're looking to kind of invest in ourselves, next up we have the Boost a Retirement Fund. So a good way to invest in yourself is, of course, starting your retirement fund. If you haven't already, you could, of course, keep it on the side, but if you want your retirement fund to build up, you can do a 401k or an IRA or both. And lastly, we have invest, and that's investing towards your future. We're doing this every day in our program, but this tax return is a huge push in investing in like a business opportunity, investing in the long-term goals that you have that is going to carry you for years to come. So think about that when it comes to your tax returns. If you're getting a return back, make sure it's used like with a wise thing, because this is your money. This is money that was given to you, that you paid your taxes already when you got your checks each time, and this is the money that they're giving you back because you paid too much. So you got to make it count. Lastly, we're going to talk about Form 1099-K. Simply because, or actually that's not lastly, but we're going to talk about Form 1099-K because it's a little special. So 2022 is a transition year for Form 1099-K, which it was last year. With calendar year 2023, all transactions will be reported on that form with a threshold of 600 in comparison to 20,000. So that means if you use Zelle, Cash App, any of those apps like that, you need to make sure to put in what the amount, like what it's for. So if it's for rent, make sure you put in the notes that it's for rent. Or if it's for just sending somebody money, make sure you put that in the notes, because any amount over 600 would be considered like a taxable income. And so unless, stated otherwise for specific reasons. So just keep that in mind, okay? Also, I do want to give a quick little tip. Anybody that is self-employed, when it comes to taxes, you would have to pay taxes essentially quarterly. So you pay once in January, you pay again in April, again in August, and again in December. 4 times a year, you're supposed to pay an estimated 25% of the income that you would be earning in a year. So if you earn $10,000 in a year, you're going to pay $2,500 each month. Yes, 25%, 2,500. Oh, I have to type. But you'll pay $2,500 each quarter as your taxes. And so that way, when it goes to file your taxes, you've essentially paid your taxes quarterly. So you were more likely to get a return back depending on your business. Or if you owe, it's way less of a hit than what it can be. So just keep that in mind. Also, same with those that do Uber, DoorDash, everything like that. Make sure you're getting your 1099s. Make sure you're putting in your the cost for gas, the cost, your expenses along with that, because those are things that you can write off on your tax return. Cool. Now let's move into deductions. All right, what is a tax deduction? A deduction is a provision that reduces taxable income. Standard deduction is a single deduction at a fixed amount. Itemized deductions are popular among higher income taxpayers who often have significant deductible expenses such as state, local taxes paid, mortgage interest, and charitable contributions. There's work-related deductions, itemized deductions, education deductions, healthcare deductions, and investment-related deductions. And let's talk about tax credits. So what are tax credits? Credits can reduce the amount of taxes you owe or increase your tax refund. Certain credits may give you a tax refund even if you don't owe any taxes. So the types of credits that there are family and dependent credits. We probably have heard about that. If you have a child, then you've probably gotten that. Income and savings credits, homeowner credits. If you own a home, you get a tax credit for that based off the interest that you pay on your home. Electric vehicle credit, same type of thing. Healthcare credits and education credits. Child tax credits, we don't necessarily have to worry too much about that, but I will go over it slightly. So the tax credit available to taxpayers with dependent children under the age of 17. Tax credit is up to $2,000 per qualifying dependent. Dependent must have lived with you at least 1/2 of the year. You must have provided at least half the child support during the last year. And modified adjusted gross income must be below $400,000 for married or $200,000 for single. And then, of course, claim the CTC on your Form 1040. And essentially that's it. Then we have the earned income tax credit. Low to moderate income workers with qualifying children may be eligible to claim the earned income tax credit. And that's credit ranges from $560 to almost $7,000 depending on tax filing status, income, and number of children. To qualify, investment incomes must be $10,300 or less. You must have at least earned $1 in a year and earned under $57,414 for the year. All right, if you have any questions at all, I know I kind of blazed through this, so if you have any questions at all, leave them in the comments, and I'll see you guys next time, okay? Bye.